Hey guys, it's Santhosh from Calgary Real Estate Investor Hub, back with another video. All right, so today I want to talk about a topic that we often see with new investors, and that is people overcomplicating their real estate investing. The first thing I want to get into is analysis paralysis. So let's dive right into it. We often see this with newer investors where they might have taken workshops or saw YouTube videos or looked up resources. While these are great resources and great ways to get started, it's important not to get bogged down into the numbers and be too deep into the woods where you can't get out of it and pull the trigger on something. So this is what we call analysis paralysis. While this is important for you to do your due diligence, don't get too bogged down to the details and try to have a macro view versus a micro view when it comes to looking at investment options. Okay, so this brings us to our next point, which is overestimating the complexity. People often think that getting into real estate or getting started in real estate is fairly complex and requires extensive knowledge, which is true to some extent. You do need some education to get started, but you don't need to know everything, and you probably won't know everything. And that's where your power team, such as your investor-focused realtor, your accountant, your mortgage brokers, all these individuals come into play. So you can lean on these individuals to help you help you with your decision-making, essentially. All right, so now we're moving on to the next point, that is focusing solely on the numbers. So not all properties look great on paper, and this comes down to sometimes properties might cash flow better in some areas versus the other, but it's important to not just look at the immediate numbers and look at the long-term outlook for any given property. This would include things such as developments that are happening close to the property, which could bump the value of the property up down the road, perhaps not right away, but perhaps in 3 to 5 years when infrastructure projects are completed. So it's important not to get bogged down in the numbers as it is today, but to have a broader outlook on the property. All right, the next point that I wanted to talk about is investors trying to time the market. Generally with real estate, you want to let time do its thing versus timing the market. The issue that we often see is by the time you realize that the time is perfect, quote unquote, it's often too late because it's already happened. So you want to let time do its thing. You want to get into the market. And there's a saying in real estate that goes, time in the market beats timing the market. So that's something you might want to keep in mind. Okay, so the next point that I wanted to talk about is investors sometimes lacking focus. And this is where a lot of people can't make up their mind, especially newer investors. They're often, absorbing a lot of information from online, from various sources. They're learning about how to wholesale properties, learning about how to flip properties. They're learning about the BRRRR strategy. They're learning about Airbnbs. But the problem is they're not a master at any of these strategies, but they kind of know a little bit of everything. We would encourage you to become an expert at one of these strategies so that you can consistently deliver and execute your go-to strategy time after time. And another aspect that ties into this is location. We do have investors that come to us and they want to invest in Calgary, but they're also looking at Red Deer. They're also looking at Edmonton, which is fine. They're completely different markets. But what we would recommend is that you dial down in one market and know that market really well. That way, when you do come across a really good opportunity, you know the numbers at the back of your mind. You know what it's going to rent for. You know what the property types are like. You know what the market prices are in that specific area, perhaps in that specific neighborhood, so you can make an informed decision faster. Okay, so the next point I want to talk about is investors overcomplicating their real estate education. We often come across investors who have taken various investing courses or workshops, seminars that are based out of different places. For example, Vancouver, from the GTA, even courses that are based out of the United States. One thing to keep in mind is, yes, almost all of these courses offer value, that's for certain. However, it's important to take this value or this education and adapt it to the local Calgary context. We often find that a lot of newer investors struggle with this aspect of it, so they try to take the information and directly superimpose it onto the Calgary market, which doesn't exactly work out the way that they're expecting it to be, because at the end of the day, it's important to know that real estate is a very local thing, and you need to kind of be able to adapt to the nuances of our local market. One more thing to also keep in mind is that the timing, the real estate cycle might also differ. So some courses might have been developed in a different time frame, for example, in a slower market or in a faster market. Whereas if you're trying to take the knowledge that they're teaching you that works really well in a slow market and apply it to a really fast market like what we have in Calgary as of today, as of right now, so that's March 2024, it doesn't quite work out the same way. So it's important to keep that in mind. So that sums up this video. There's lots of ways that you as an investor could overcomplicate your real estate investing, but it doesn't have to be. So keep it simple.